The RBI last week raised the repo rate by 25 basis points, increasing it to 8%. This move is expected to have a significant impact on home loan rates as banks debate whether they should increase lending rates to account for their increased expenses. So what can we expect on the home loan front going forward, and what options do home loan borrowers have? Nikhil Sivadas has this report.
If you thought buying a home was tough before, then the process has only gotten a whole lot tougher. The RBI raised the repo rate, the rate at which banks borrow from the central bank, to 8%. As a result, banks now have to deal with a higher cost of borrowing. That means that they will have no option but to pass on these costs by raising lending rates for individuals and companies.
RBI has recently increased the repo rate, and if we look at our home market, 80% of the market is at floating rate of interest. At least for the short term, you're right, there could be some hike in interest rates for home loan borrowers.
While the RBI may be trying to control inflation, the knock-on effect on personal finance products like cars and home loans cannot be denied. One solution to counter the effects of the RBI's move would be for banks and housing finance companies to absorb part of the increase internally. Experts believe that smaller institutions that are struggling with falling numbers may adopt that tactic. However, the larger players who have a stronger presence may not be as accommodating.
It's a competitive market, right? We're seeing a lot of new players come into the market. NBFCs are getting more aggressive. We're seeing ads from a lot of these NBFCs on home loans right now. New banking licenses are expected. So definitely it's a competitive market, and lenders will think before passing on further rate hikes in a competitive market.
So what can home loan borrowers do in such a situation? Well, one option would be to either prepay a part of the loan to reduce interest burdens or increase the EMI to reduce the tenure and the overall amount paid. The other option would be to shift your loan to another lender to take advantage of cheaper interest rates. However, there are also other unorthodox options, such as going for loans linked to an overdraft facility. Here, any surplus money you deposit into the account will reduce the principal amount, which is used for calculating interest, thus reducing your interest burden.
When I typically am advising people on this particular product, I say, hey, have two columns. In one column, build out your total interest outgo on the normal option. On one column, do it on the home saver option, keeping in mind how much you expect to have in your savings account. And the numbers which turn up, right, are actually quite interesting. So, if we work on a case-by-case basis, you'll see that there's some cases in which the regular home loan is better for some people, and in some cases where the home saver home loan might be better for others.
In the meantime, realty experts claim that customers will not be shying away from home loans anytime soon. They say that the current market has seen developers offer such attractive discounts and offers that the number of buyers, especially first-time buyers, has actually increased. A scenario that's bound to see increased demand for home loans.
People who are buyers today are the first-time home buyers. They will see the kind of volumes what you see in most of the cities are the people who are buying their first home, and they don't have capital today to go and fund the deal 100% on their own. So they will continue to see home loan as an option to avail, and they will continue to take it irrespective of whether the rate hike is there or not there.
While there may be an uptick in customer interest, it's clear that bankers and lenders are now seriously debating the pros and cons of hiking rates. So any customers wanting to go in for home loans at the moment should weigh their options very carefully before they commit. From Mumbai, Nikhil Sivadas, NDTV.
Okay, so will bankers and housing finance companies bite the bullet and hike interest rates? Let's deliberate on this with our expert. We are joined by Harsh Rungta, CEO of ApnaPaisa.com, and also Gulam Zia, Executive Director, Knight Frank India, both of us joining us from Mumbai. Gentlemen, thank you so much for joining us today. Mr. Rungta, I'd like to begin with you. The RBI governor, in his inflation firefighting, has raised the repo rate. And how do you see banks responding to this big development on the home loan rates?
Well, I think home loan rates had shown some signs of little sagging, I would say. I would not call it reduction, but a little bit of sagging was on view that time. But I think after this surprise hike in the policy rate, that sagging is clearly gone. And I think really looking forward, you can't really see rates going down, but I can't really see them going up by much either. I think it's a very sideways kind of a situation right now, because home loan demand isn't exactly shooting through the roof right now.
Gulam Zia, bringing you in, was this a bad timing for the real estate space? We know slowing sales, rising inventories, and now the rate hike. Is the sector going to slump further into a slowdown situation?
Not really. First of all, it will be worth noticing that something which the government or the authorities had spoken about 6 months back, that housing will be treated separately and the impact thereof on repo rates revision will not be that much. That has come about almost at the same time when we noticed the repo rate hike of 25 bips. So number one, housing as an industry will not be taken into commercial real estate lending that we're talking about. So that would not have any impact on first of all mortgage. On the other side, so far as developers are concerned, it's also be worthwhile noticing that in any case the funding of real estate was on a very low from all the banks, and already there was huge amount of liquidity with the banks, and pushing money into real estate was obviously an option, which is now only brightening because this whole thing about housing keeping aside from the commercial real estate aspect. So it's not something which will have much of an impact in any case on either the mortgages or developer lending. On the other side, just about a week or two back, quite a few of the banks were actually considering seriously about lowering the interest rates for mortgage, home loans, etc. So with all that, I don't really see much of an impact with this 25 bips reduction increment that we're talking about. On the other side, if you're asking about what will be the impact on real estate, I would say it's any case is in such a poor state of affairs in terms of sales and transactions, etc. Nothing bad can happen. It can't go any worse than where it is right now. So anything, if at all anything can happen, it'll only go up.
But Gulam, what about a hit on the sentiment? Interest rates are already hovering in the double-digit category. With this hike, would you expect some amount of impact on the demand that you're seeing from consumers?
See, on sentiments as well, it's very clear that most of the banks were talking about it. It was in media that banks are looking at reducing the interest rates. So on the other side, this has happened. So if at all something will happen, they will maintain whatever rates that banks were offering all this while. So if I'm talking then about the sentiments of the buyers, well, I would say it is still going to be a state of indifference because the home loans are where it was for last couple of months. So those who are buying for the serious consumption will continue to buy. Obviously, it will have an impact on investors because it's pretty high, already very high interest rates that we're talking about. So investors may actually pull out of the market, and which is once again not new. It's happening in any case. So once again, as I said, it's the state of status quo.
Okay, Mr. Rungta, earlier in your replies you said that the prevailing rates were rather saggy, but you're not expecting rates to now go up, banks to now increase rates. But if we go back to October 2013, when RBI last hiked the repo rate, interest rates were in the 10.30, 10.65% range. By December, SBI, India's largest bank, went ahead and they widened the range for the lower housing loans from 35 to 75 lakhs. They widened that range and they brought the interest rate down to about 10.15%. A lot of banks followed suit. So now do you feel that they have a window to maybe cross this gap and maybe increase rates now that RBI has increased the repo rate? Do you feel there's a window for increase?
Yes, rates could go up a bit. I don't think they could go up too much. In fact, there was an abortive attempt at increase in spreads, just a couple of days back, which has been quickly rolled back by a few banks. So it's not really come in the public domain, and which would have been novel. For the first time, I think we would have had new consumers paying more than existing consumers, and that I think is a fairly new thing for the Indian market. That hasn't really happened, but I think clearly the trend is that rates can't really go down. The rates may go up a little bit, but there clearly, as Gulam said, there clearly is a demand issue. So if they increase rates too much, already there is an issue on demand, and I think it will just have a further impact on the sentiment. So I think we are in a very, very narrow corridor with a slight upward bias, I would say, slightly upward bias, till something happens on the inflation front, and therefore on interest. I don't really see anything major happening on the home loan interest rate front, at least.
Mr. Rungta, the governor also in his monetary policy statement said that this present hike will probably be the end of the tightening cycle. How do we read into the governor's statement?
Well, I think there is an entire industry that reads the tea leaves as you see it in the governor's cup, and I think they are very, very well suited to do that. I personally feel that clearly if inflation doesn't come down, I think that really is going to be an issue. So I think all this is dependent on inflation, and which was very much stated in the governor's statement as well. So I think right now it's wait and watch. It's very, very tough to predict which way it will move in 3 months' time. As of now, it would be wait and watch with a slight upward bias.
Okay, Harsh Rungta says wait and watch with a slight upward bias. Gulam Zia, what is your view? Should buyers sit on the fence and wait it out, or should they go in for hunting out the best distressed deals?
Well, situations are uncertain. Let's face it, we are getting into the whole political environment soon. Another month or so, we'll actually see the biggest event of our polity. And that only means that we have to wait and watch. We should not really get into a situation where we end up blocking our money and then suddenly see something different or something unforeseen coming up in terms of political environment, etc. So these are a few months where people would rather wait and watch, let the stability come in, because we obviously are expecting with, if at all, there is some stronger political leadership emerging. Obviously, it will have an impact on sentiments, and on the back of sentiments improving, suddenly you will see an upsurge in real estate prices, which would perhaps hardly be about 2 or 3 months from now. But that obviously comes in with a rider. If that doesn't happen and you have already blocked your money, then you could be in a soup. So it would rather be better to be on the cautious side and wait and see. As they say in Hindi, "Oont kis karvat baithta hai." We have to see exactly what's emerging after the elections.
Okay, so wait and watch, both of them say, and see how the situation pans out with the nation going to polls. Gentlemen, thank you so much for joining me today. Thank you for your time and your expert inputs. Okay, moving on to your Q&As.